Chad Cohen. I'm the Vice President. Here at Credibly, we're a financial institution that lends money to small and medium-sized businesses. I've been in the space for 15 years or so. Virtually every aspect of the sales process have I touched, from underwriting to the wholesale and retail channels to directly to merchants. So I've got a lot of experience doing this. I also ran a restaurant for 10 years, so I understand the plight of small business owners, in addition to being a father and a husband, and understand that balance. Well, you go to your local bank, there's a benefit. Certainly you have a relationship. They typically have all your other finances in terms of bank accounts. First of all, I recommend small banks over big banks when you're looking for a local business financing package. Small lenders are often more invested in the towns of which they have their banking institution, and they offer strong rates. They're connected to the community, so they have an understanding of you, your business, what it's looking to do. And to be honest, they offer very competitive financing packages for those who would be approved for that. The ability to secure this financing is challenging. On larger banks, it's even more challenging. A smaller bank might be able to give you a little leg up. Either way, however, the requirements are stringent. You need to have very strong credit, multiple years in business. You need to have a strong business that has steady revenue over time. Ideally, assets that you can provide that will help the bank collateralize the financing they're going to provide. Securing bank-based financing is challenging. You need to have multiple years of tax returns that show profit. You need to be able to provide financials, year-to-date and previous year financials that show profit. You need to have stable payment history, not only with lenders and mortgages, but vendors. You need to be able to have your debt sheets and cash flow statements. In addition, and possibly most important and most difficult, is a really savvy business plan to explain to a bank why you need the money and how you can afford to pay it back. Okay, so when you're working with traditional banks, they're not the quickest folks in the world. Again, if you work with a smaller lender, it's going to be a little quicker than a larger bank, but you can expect it takes anywhere from 2 to 3 weeks to 2 months to actually secure a package. If you need to collateralize real estate or any other asset in order to land this type of package, it could even take longer than that, as there's just a lot more hoops to jump through on that side. Most of the time, you're going to get anywhere in the range of 3x your monthly revenue, okay, or a third of your yearly revenue. Now, a lot of that depends on the business plan that you provide. Well, the most important thing when applying to a bank or any term loan type provider is preparation. You need to have positive tax returns to be able to provide the documentation on a moment's notice. You need to be able to, more than anything, clearly define what you're using the money for and how the bank can be certain that they're going to get their money back, right? That's what banks do. They just look at the risk and the reward, and most businesses struggle to provide a defined knowledge of how the bank is going to get paid back. That is the reason it's so hard to get bank lending. Not only do you need to have a profitable history, but you need to be able to prove a path to a positive future as well. Okay, so when considering the SBA, the first thing you want to understand is the SBA is simply backing the loan product. The loan is still underwritten by a lender, okay? What the SBA does provide, and one of the reasons to go to them, is they provide multiple different use cases through the application process. Expansion, debt consolidation, even startups, commercial loan financing. There's all sorts of ways to get SBA financing so that you can solve all of your business's needs. I very much encourage preparation. Make sure that your documentation is there, right? Most importantly, you need to be in the US, right? It's only for US operating businesses. You have to be under a certain size. I believe 20 million is the max size that they'll do in terms of yearly revenue, right? They will not invest in quote unquote vice-based businesses, and the creditworthiness of the applicant, it has to be non-negotiable. So your FICO needs to be there. Your tax returns needs to be filed and positive. All year-to-date financials and bank statements need to be able to be provided, and they need to be strong in terms of not only your credit profile, but your ability to manage your cash flow. The SBA is kind of creative in terms of use of funds. So they will offer, most of the time they're going to be in, again, 33% of your yearly revenue range. But if you can present a very compelling case, they do have the ability to offer higher dollar amounts up to 5 million, right? And again, multiple different products that are available for use of funds. You're looking in the range of 60 to 90 days. I have seen a few get done earlier in 30 to 45 days, but the SBA is not in a race. Remember, the SBA is simply backing a bank loan. So you have to go through all the throughput on the banking side and then connect to the SBA, which has to back the product. So it is simply not a quick process. So the fintech space is what we call online lending. It is a really great space in that there are a ton of benefits. First of all, it's incredibly easy. The documentation is far reduced from bank-based loans or SBA products. There is a very, very strong ease of use from a speed perspective. You can apply on a Monday, get an offer later in the day, and get contracts out and funded within 24, 48 hours. It's a very quick process if you are prepared from a document perspective. In addition, much more relaxed approval process, far easier to secure. You don't need all the tax documentation. In addition, your credit profile does not to be as stellar as it does for the SBA or bank loan products. So securing financing through the fintech space is not near as challenging as from the bank and the SBA side. The requirements, first of all, are far reduced. You need to be in business for 6 months. You need to generate a little less than $200,000 in yearly revenue. You need to run all your revenue through a business checking account. You can't use a personal checking account. But outside of that, it is very easy to apply. From a documents perspective, again, you need to be able to sign a one-page application with all your specifics, bank statements. You're likely gonna have to prove you own the company, and on larger deals, you might need tax returns. Outside of that, it's a pretty simple process. When you're working with fintech finance companies, the process is very quick and easy. First of all, I encourage you to be prepared. Make sure your documents are there. But you can get money pretty quickly. Again, if you apply on a Monday morning, you wake up over the weekend and realize you have an opportunity, you can apply on a Monday morning. By mid-afternoon, you should have an approval. You can make the best choice with the broker or salesperson or lender that you're working with, come up with the right product for you, and literally by the next morning, you could be in the closing process and have money out the next day. So from an ease of use perspective, it's fantastic. If you have enough time and you know you need a lot of money to handle the project that you have, and you're well qualified, you have all the documentation, and you can qualify for all these advanced products, going the route of the SBA or the bank makes sense. One of the things that fintech provides is not only a far easier securing of finances, but you can also go back as your working capital needs expand, right? They're gonna allow you to get money as you need it. Working with the fintech companies gives you the most flexibility, the ease of use, and the greatest speed. So if you need to buy out a partner and you need to wait on the bank, the partner might not wait for you to make the transaction he needs. If you need to buy inventory from a competition that's going out of business, they might not wait for you to go to the SBA. and secure financing in order to make that transaction work. If you come to a company like Credibly, you apply on Monday, you get approved, by Tuesday or Wednesday, the money's in your checking account so you can handle your needs in a quick and efficient fashion. When working in the fintech space, the first thing that I would recommend to everybody is work with someone you trust. My experience is in this space that if you work with someone who doesn't have your best interest at heart, they can often lead you down a path that is over time not really helpful for you. I work with someone that is trustworthy, that understands and is listening to you on what you want and what you can afford, and help create a product that fits your needs. So rule number one is work with someone you trust. Rule number two, make sure you know what you need, right? This kind of product, you want to get the amount of financing that matches your use of funds. So whether you need $20,000 for a quick payroll injection, or whether you need $150,000 to buy out a partner or buy out a competitor, you need to be really well aware of what you need to complete your project so that the package you secure matches up with your needs. Hence, using fintech to solve your working capital needs, in my opinion, is the best solution due to the ability to go back over and over and the ease of use. As I stated in the past, most importantly when analyzing the fintech space, work with someone you trust, work with someone you can count on who will be there over time. And in this case, I definitely recommend Credibly.